Hi, this is Shupriyo from shupriyopanda.com, and today we are going to continue with the RBI Grade B Interview Preparation series. So up until now, I have told you all about my marks, about how to prepare, and also we have discussed about the biodata form. So from now onwards, we are going to delve deep into the question and answer series. And this will continue for the rest of the interview series, and I'll take questions from you as well. If you have any, you can put them down in the comments below. And if you want any help regarding your profile, then I'll also be happy to help with it. You can just contact me directly or write down in the comments and I'll surely get back to you. So let's jump into the first question. What is KYC and AML? KYC and AML are often discussed together as if they are a same entity. However, it's a little bit different. KYC stands for Know Your Customer and AML stands for Anti-Money Laundering. And you must remember that KYC is one of the types of things that are done to ensure that money laundering does not take place. So money laundering is not only confined to KYC, but it has other activities as well. So when we talk about KYC, usually every customer has to have a KYC before they can open an account at a bank or at any financial services company. It basically establishes that it's a genuine person who is going to open and who is going to conduct that account, and it avoids any kinds of frauds. So let's take a look at the 4 pillars of KYC. So there are 4 pillars of KYC, which are CAP, CIP, MT and RM. What do these mean? CAP stands for Customer Acceptance Policy, CIP stands for Customer Identification Procedure, MT stands for Monitoring of Transactions, and the fourth one is Risk Management. So these 4 pillars are quite integral to KYC because you need to accept the customers as per the guidelines of the bank and set by the RBI. So you need to have acceptance policies first. Then you have to identify whether the customer that you have accepted is actually the person who is stated in those records, in those ID cards that he has given to you. So you have to get identification done, and after that your work does not actually stop because you need to be monitoring all the transactions that are being done by that person, because the frauds can happen afterwards as well. And risk management is the fourth thing. So you have to manage the risk properly. There are various kinds of risk levels in the banking industry, like low risk, medium risk, high risk. So your customer must be segregated into one of these risk tiers. So that's a bit advanced and we don't need to get into those kinds of things, but you need to remember these 4 pillars of KYC. And you need to also understand that KYC is a mandatory thing and nobody can escape from it. So there is another thing in this subject, which is the anti-money laundering, and anti-money laundering is defined in the Prevention of Money Laundering Act 2002. So this is the central act as per which we are doing all the anti-money laundering activities that are done. And another thing you have to remember is that there are 7 official OVDs or officially valid documents that can be accepted by the banks or the financial organizations to open your account. So what are these 7 OVDs? These are passport, driving license, voter ID card, PAN card, Aadhaar card, Narega job card, and the NPR letter, which is the National Population Register letter. So any of these 7 OVDs you can take to a bank and get your account open. So that is all about KYC. Let's move on to the next question. So it asks, what is CTR, STR and CCR? So CTR stands for Cash Transaction Report, STR stands for Suspicious Transaction Report, and CCR stands for Counterfeit Currency Report. So these are different kinds of reports that banks have to submit to their central authority, which is the FIU India, so that all of the suspicious transactions can be directly reported to the government. Now, FIU India, this is a wing of India. It stands for Financial Intelligence Unit, and all countries have their own FIU wings, and all of these are governed by FATF, which is the Financial Action Task Force, which actually governs all of these FIUs. Now, India's FIU is responsible for all of these transactions that are reported to it by the bank. So cash transaction report must be sent by a bank when there is any transaction in cash that happens and which has a value of rupees 10 lakh or more. Now, suspicious transaction report is whenever a suspicious activity is seen in a account which is normally operated without any kind of issues. And CCR is for the counterfeit currencies. So if any kind of counterfeit currency is detected by the bank, it must immediately be reported to FIU so that the government can make a note of it. Now that's all with this question. Let's move on to the third question, which is the difference between the LC and the BG. Now LC stands for letter of credit and BG stands for bank guarantee. Now both of these things are defined in multiple books and you'll find videos etc. all about it. So I'll not go deep into these things. If you want me to make a video on LC or BG, just let me know in the comments down below and I'll just tell you the functionalities and the differences. So LC is basically a financial document and it is used mainly in export and import, whereas BG is a bank guarantee. It's a guarantee. Sometimes it can be a financial guarantee or it can be a performance guarantee, and it is used in export import and also for government transactions, government contracts as well. So LC is a document which needs to be presented before a foreign seller can actually get the money. So for example, in a export import transaction, there is a foreign seller, and for example, you are the buyer sitting here in India, you get some goods from that foreign seller, right? Now, when you get those goods and the title of the goods is given to you, there are certain documents. So these are called title documents, and these are, for example, letter of lading, etc., etc. So these documents need to be presented to the bank, after which the bank will release the payment to that seller. So there are multiple banks involved here. There are issuing banks, confirming banks, buyer's bank, seller's bank, lot of it. And there are maybe 5-6 parties or even more sometimes involved. However, in a bank guarantee, there are only 3 parties. There is a bank which is giving you the guarantee. There is a customer of that bank. And the third person is the person for which the guarantee is being made. Now, what's the main difference? So these are the technical differences. Another difference is that LC is paid out when the contract is fulfilled. So after the fulfillment of the contract, only then the LC is paid out, whereas BG is paid out when there is a non-fulfillment or there is a default. So for example, if something which was contracted was not able to be delivered, that time the bank guarantee is called invoked. So once you invoke the bank guarantee, you get the payment, and it's only for defaults. However, LC is only when the contract is fulfilled. And these are the main important differences between the LC and the BG. Both of them are quite similar. They are called documentary credits, and they are also known in the balance sheet as contingent liabilities because their delivery and their payment is dependent or contingent upon lots of different kinds of factors. So I might make a video on this if you want. So please let me know in the comments down below. Let's move on to the next question. That states, what does section 138 of the NI Act deal with? Now the answer to this is that it deals with check bounce cases. There can be a long answer as well if you are a banker or from a finance background. However, you'll be knowing that section 138, there are various sub clauses as well. So what happens if a bank has a check which is bounced, then you have to pay penalties for it. And there are many kinds of different things that happen. Now all of these things are noted down in the NI Act. So it's quite important that if you are a banker or you have a finance background, you need to read the acts, the NI Act, the Negotiable Instruments Act, the RBI Act, and the Banking Regulation Act, etc., etc. So if you say it's for the check bounce cases, for a normal candidate, it's all right. And for a banker, you just have to explain that what happens when a check is bounced, how do we handle those checks. So just read a little bit about it. We don't need to go into detail in this question. So next, go over to the next question. This is a question on women in the banking industry. It's a very popular question, especially if you are a female candidate. You can be asked this question, that who do you think are role models in the banking industry and also women? I would say that you can mention 4 important names. For example, there are Srimati Arundhati Bhattacharya. She was the chairman of SBI. She is no longer the chairman. She has been replaced by Rajneesh Kumar. But she was an extraordinary woman. She was an English honors graduate, and then she worked hard and she climbed the ladder and she found herself at the top of the Indian banking industry. So read a little bit about her. There is also Chanda Kochar. Now Chanda Kochar was the MD and CEO of ICICI Bank. She is mired in a few controversies as of the moment because of some Vodafone loan cases that happened against her. But anyhow, she had a fantastic career in ICICI Bank. She rose to the top, and she's one of the stellar figures of the female banking industry. And the third name that you can remember is Shikha Sharma. Now, Shikha Sharma is the MD and CEO, was the MD and CEO of Axis Bank, and she also had a storied career, and she was quite popular in the banking domain. And the fourth name is Usha Ananthasubramaniam. She was the MD and CEO of Allahabad Bank. However, she is also mired in a bit of controversy with PNB and some other cases. So that's all about that. And you can read a little bit more about all the women in the banking industry, people who inspire you, especially female candidates, if you are asked. So you might be asked why you are pursuing banking as well. And you can bring up all these names. It will be quite a good answer in any kind of these types of questions. So let's move on to the next question, which is the functions of the RBI. Now, I made a video on the role and the responsibilities of RBI and how we can tie it up to the preamble. So I hope you've watched that video. If you have not watched it, please see the descriptions down below. I'll leave it there. Or you can go ahead and check the RBI Grade B playlist. It will be there and it will clear everything up. So these were a few of the questions that the panel can ask you in the RBI Grade B interview. We'll continue with the next set of questions in the next video. See you in the next one. Bye-bye.